All right, India's annual budget is out, and wow, it is packed with some big headlines, some major market surprises, and a pretty clear vision for the future. So, in this explainer, we're going to break down exactly what the 2026 union budget means for the economy. Let's get right into it. So, the person at the center of it all, that's Finance Minister Nirmala Sitharaman, and get this, it's her record ninth consecutive budget. Now, this whole document is basically the government's economic game plan, right? It's a massive juggling act trying to make tough choices to keep growth going. And believe me, this year's budget had some really significant moves. And that really brings us to the core question, doesn't it? Is this budget a bold, forward-thinking plan for the long haul, or did it kind of miss the mark on what the country needs right here, right now? Let's dig into the details and see what we can figure out. Okay, so first up, let's zoom out a bit. We're going to look at the big picture, the core philosophy and the main numbers that really tell the story of what this budget is all about. The finance minister herself put it pretty simply. She said the goal is to maintain the growth momentum. So how do they plan to do that? Well, the strategy is all about using these big structural reforms to boost productivity, create more jobs, and make sure India stays tightly plugged into the global markets. The end game? Attract that sticky, long-term investment. And here's a huge clue as to where the government's putting its money. See this number, 4.4%? That's what's called capital expenditure, basically money spent on building long-term stuff as a piece of the entire economy, the GDP. And get this, it's the highest it's been in at least 8 years. That's a huge signal that they're going all in on building things like roads, railways, that critical infrastructure. Another major priority? You guessed it. Defense. We're looking at a huge 15.1% jump in defense spending. That tells you a lot about where the government sees a critical need for investment, especially with everything going on in the world today. But check out this contrast. So while spending on infrastructure and defense is shooting up, the slice of the pie for the health sector is, well, it's just under 2%. And that, right there, is your classic budget trade-off. It shows a really clear choice. They're prioritizing those big, long-term building projects and national security over other things. All right, now let's get to the part of the budget that everybody was talking about. I mean, this was the big one. A single change that sent absolute shockwaves through the financial markets. Literally one single announcement, and the reaction was immediate and pretty dramatic. The Nifty 50, which is a really key indicator of how the stock market is doing, it just tumbled by nearly 2% right after the news hit. So what on earth caused such a big stir? Okay, so it all comes down to 3 little letters. STT. That stands for Securities Transaction Tax. And to put it super simply, it's just a small tax you have to pay every single time you buy or sell securities. Stocks, futures, options on an Indian stock exchange. And just look at how much that tax went up. For these more complex things like futures and options, the tax more than doubled in one case, and it jumped by 50% in the other. Now, for traders who are making, hundreds of trades every single day, these seemingly small changes, they add up to a massive, massive increase in their costs. So here's the bottom line. If you're a high-frequency trader or a scalper, someone whose whole game is to make a tiny profit on super fast price swings, this tax hike just made your life a lot harder. Your break-even point just shot way up. The cost of doing business for these guys, it just got way more expensive. Okay, but that whole market shakeup, it's really only one piece of a much bigger puzzle. The government's argument is that this move was all part of a larger strategy. So let's look at where the big investments are actually going, and it's all about building India's future. And the scale of the spending here is just immense. I mean, we're talking about a huge amount of money for 7 new high-speed rail corridors. The budget is also setting up new corridors for mining rare earth minerals, which are super important. Then you look at the tech sector, there's a massive tax break for foreign companies, setting up data centers, a tax holiday all the way until 2047. And on top of all that, you've got new programs for small businesses and a huge 10,000 crore rupee push for biopharma. It's a lot. Yeah, this really captures the whole idea, doesn't it? The focus is absolutely on that capital expenditure we talked about, building out the physical and digital backbone of the country. The thinking is that this is the best way to really drive growth in the medium term and, lay a solid foundation for whatever comes next. Okay, so we've seen the 30,000-foot view and the long-term plan. But what about on the ground? How does all this actually affect specific industries and, well, everyday people? When it comes to customs duties, it's a real mixed bag. On one side, the duty on potassium hydroxide is going up, which could mean things like soaps and detergents get a bit pricier. The government's also tweaking the duty on umbrellas to discourage cheap imports. But on the other side, if you're bringing in personal goods, the duty on those is getting slashed from 20% down to 10%. And for businesses, there's a new single digital window for cargo clearance, which should hopefully make doing business a whole lot easier. And here's a big one for pretty much everyone. The Income Tax Act, which is about 6 decades old, think about that, it's getting a complete overhaul. The promise is a brand new, simplified act coming in 2025 that should be much, much easier for all of us taxpayers to figure out. And that's set to kick in on April 1st.
All right, let's bring this all home. Time for the final takeaway. When you strip everything else away, what's the core debate? What's the real philosophy that's driving this entire budget?
Well, as you might expect, the political reactions were, let's just say, worlds apart. On one side, you have Prime Minister Narendra Modi, who said the budget reflects the thinking of the youth, their dreams, resolve, and vigor. But on the complete other side, you have the leader of the opposition, Rahul Gandhi, calling it a budget that refuses course correction, blind to India's real crises. I mean, you couldn't get two more different takes on the exact same set of policies.
But ultimately, if you have to boil this entire budget down to just one single idea, it's probably this: prudence over adventurism. This wasn't a budget full of big, flashy populist giveaways. Instead, the focus is squarely on fiscal discipline and those long-term foundational investments we've been talking about.
And that right there connects everything back to that market shakeup we started with. The whole strategy seems to be, let's deliberately make that short-term speculative trading more expensive, and hopefully that encourages people to shift toward more stable, long-term investments that actually build the real economy. That STT hike, it wasn't some random thing, it was a central piece of this entire puzzle. Which leaves us with one final and really critical question. This budget makes a very clear choice, right? It's prioritizing long-term investment and being fiscally responsible over any kind of short-term relief or trying to please the markets. So the big question we all have to think about is, with all the challenges India faces today and all the opportunities of tomorrow, is this the right path for the country's future? Something to think about. Thanks for joining me.